to another episode of Anything But ASIC. Let me see here, get this mic ready. Okay, there it goes, better. Never underestimate the power of replacing your USB cable. Sometimes these Chinese manufacturers, they just ship with, the bargain bin one they can find and it's not shielded and you get static. Well, it's like a somewhat taking care of the static issues, and the technical difficulties are gone, and things seem to be working quite fine. So, what's been going on, guys? I've been around in quite some time, I know, but things have been going down. Been going down. If you probably heard, not so fresh news, which I guess this is take 3 when it was fresh news. It was fresh news. The banks are collapsing. The banks are collapsing, and there's been some tinfoil hat theories going around. Now, I got this up. I was reading this earlier. This is a picture from 2012 where this lady, she was doing van life the wrong way, and this was updated March 13, 2003. Just for recent reference, let's come down to. And, this may have been 2012, but here we are again doing the same thing, going through the same bank crisis. This time even worse because we didn't recover from 2008. And people call this a recession. I don't want you to call it a recession, but I'm going to personally call it a depression. And it's going to come on slowly, of course, but we'll see. So what's been keeping me? I've had a really, like I said, I was having technical difficulties, and I was having a really bad time with Ezolix, trying to get my trades through from crypto, sending some crypto through the exchange, a centralized exchange, of course, but one of these instant exchanges. Generally, what happened was my transaction got stuck. And I sent it to the exchange to get exchanged, got stuck, and I've been going back and forth within the last 2 weeks between the help desk to get everything resolved. Eventually, I got my crypto back. Good on them. It looks good on them. It looks good on me. I'm kind of happy with the service. I'm assuming that why it took so long, because generally when I work with Simple Swap, I get it done. If something were to happen like this, it'd be done within a day or two. But I'm assuming with Zolix, there's only like 2 people working there, so I think this is pretty good progress. But let's see, things I've been doing. I figure it's about time I get into Solidity. Start learning Solidity at least, so I can make some smart contracts. I forgot what Dero is using. I really probably want to do a smart contract with Dero, but at least start with Ethereum because that's what the market wants. Just like JavaScript and Python and supposedly data science, that's what the market pays for and what the market wants. I'm not sure if it's useless stuff yet, but this is where we're gonna go. If they're gonna throw money at people for learning this, then I'm gonna learn it. I'm not gonna fight it. I'm just gonna learn it. Looking at the market today. Oh, by the way, PFX is doing very, very, very good. As of a few weeks, they tried to pull it down, and it immediately bounced back up. Hit close to its yearly high, and it's been kind of sitting there bouncing back and forth. I personally hope it just drops a little bit again, so I can trade back into it. But that's what I've been doing. Looking at the markets, Bitcoin's doing okay. It's at its yearly high. Ethereum's been flopping back and forth, between 1,700 and whatnot. The one thing that stood out, the one currency that did stand out, that is no longer on the front page anymore, I gotta throw some shade, it's petty time, is Zcash. Zcash going to proof of stake is generally going to wreck it. And like I said before, in one of my previous videos, we don't need Zcash to go to proof of stake. We already have PIVX. It's made by the same company, same ZK snarks. We don't need it. If you want to go a step further, Masternodes, Firo, same company, Electrocoin company, it's already there. We don't need it to go proof of stake. Other than that, Dash is getting the D9, the Antminer D9, and I would tell Bitmain, put down the pipe, because nobody's going to purchase this thing they're trying to sell it in the Silicon D9. No, Antminer D9. Antminer Z9. Oh, did they cancel it? That'd be funny if they canceled it. They were trying to sell it for 10 grand. I was like, no, nobody's gonna buy this. No way. Nobody's gonna buy this. Anyways, the D9 is here. It's around the corner, and like I said, nobody's gonna buy it. Pretty much nobody bought the D7. Everybody knew it was gonna be a scam. I mean, everybody that had been here long enough to get the D7, get the D3s, knew that it was gonna be a scam, so they weren't gonna run into it at first, even if it is profitable. So, getting into the articles, Brian Books, U.S. government using crisis to check off crypto assets to banks. I'm going to show a spicy meme in a minute. The former acting head of the OCC said federal regulators are working together to keep crypto assets out of the U.S. banking system. And I say good. The faster they decouple from the USD, the quicker we find out which projects are actually here to stay. Oh, by the way, I didn't show that. After this banking crash, a lot of cryptocurrencies, the coin count, definitely dropped. It dropped from was about 13,000. Now it's sitting at 11,000. And I'd say it's a great thing, really. It's a great thing. It's time to clean up the crypto market to make room for the new IPOs, which is the AI currencies. You technically already had AI currencies, I think IOTA and IOTEX or something like that. But the AI currencies are coming. So moving on. That's a spicy meme. Okay. Anyways, spicy meme time. It's pretty clear there has been, reading this article, there has been a decision across the banking regulatory agencies in the Biden administration that crypto is inherently risky and needs to be eradicated from the banking system. Brian Books, the former acting head of the Office of Comptroller of the cryptocurrency, say that 3 times fast, told CoinDesk TV's first mover on Wednesday. Last week, Silvergate Bank, a California firm that catered to crypto companies, said it would voluntarily liquidate and shut down. Days later, tech startup focused firm Silicon Valley Bank, which had some crypto clients, emphasis on some, not all, crypto clients, was closed by the California Department of Financial Protection and Innovation, which said the bank had inadequate liquidity and insolvency. So the bloat came shut you down for not having bloat. Then over the weekend, New York-based firm Signature Bank, which also had a number of crypto clients, was closed by New York state banking regulators. The Federal Deposit Insurance Corporation, FDIC, which everybody knows about, took receivership of the SVB and Signature. When he ran the OCC, I had a weekly call with the FDIC chairman and with the vice chairman of the Federal Reserve, said Brooks, now a member of the board, blockchain company Bitfury. So this guy's just been around. He's been turncoating. We talked every week for an hour and talked about what our priorities were for the coming week, how we can support each other, and how our actions would affect the banking system. So he's a plant. Brooks reiterated comments made during the Milken conference in Washington, D.C. earlier this month that the Biden administration is trying to close down crypto in what he calls Operation Choke Point 2.0. The biggest story in the next 6 months. The original Operation Choke Point was the Obama-era initiative when Joe Biden was vice president. He was vice president? Really? He was as quiet as vice president ever. Investigating banks and the businesses they did with, among others, firms believe that to be at a high risk for fraud and money laundering. My belief is that regulators are trying to send a signal that will eventually choke this crypto off, Brooks told CDTV. Brooks said he's 100% confident regulators were working together in shutting down the three banks, despite the differing circumstances. The New York Department of Financial Services, for instance, said Tuesday Signature Bank was not closed because of crypto, but because of a crisis of confidence in the bank's leadership. Signature had been working to decrease its exposure in crypto in recent weeks. The California Department of Financial Protection and Innovation said it took over SVB, where CoinDesk once banked. Because of its inadequate liquidity and insolvency, Silvergate Voluntary closed a week after saying it would be late following its annual report and was not sure about its ability to continue as a going concern. I wonder if this can be used to shut down other banks as well. These not regulations, these concerns, quote unquote. This is just a thought. Still to Brooks, these things are not accidents at all. I'm highly confident of that. But crypto won't be so easily cut off, said Brooks. There's always smaller banks that are willing to step up and work with crypto companies, he said. But it would be better if larger banks with better risk management were serving the sector. And that's the end of the article. Like I said, I wonder if these circumstances could be used to shut down larger banks. Does that apply to any larger banks? Or are they just going to gloss that over? Moving on to the next article. If you guys forgot, why isn't the Federal Reserve requiring banks to hold depositors' cash? In the middle of bank runs, we're looking for our cash to withdraw and get out. We're looking for our digital ones and zeros of USD, and it's not there because it's not on books. It's just not there. Ready to learn how banks make their money. The fact that most banks are required to keep your money on hand makes it likely that more bank failures will occur in the months ahead. The bailouts are starting. Once again, be your own bank. Bail yourself out. The Federal Reserve Board reduced banking reserve requirements to zero in March 2020. Just in case you forgot, since the time banks in the United States have not been required to actually hold any depositors' money in the bank, making a flawed system, fractional reserve banking worse. Basically, they've been running a cryptocurrency. We just didn't call it a cryptocurrency. I bet you don't know where those ones and zeros came from. They're more secretive and secure than actual Bitcoin. Jeez. It's funny right now, Joe. Well, Silvergate Bank, Silicon Valley Bank, and Signature Bank now shuttered. Many in the U.S. are wondering if the regional banks pose the same risk. I was just asking that. The zero reserve policies at the Federal Reserve only make further bank collapses more likely. Fractional reserve banking and Silicon Valley Bank. Before the pandemic, banks had to hold 10% of deposits in cash. When depositors put 1,000 in the banks wasn't required to hold that 1,000. It holds 100 and loans out the 900 to customers in search of a mortgage, cars, etc. Banks charge an interest rate on those loans, which is one way in which the bank makes money. So a bank account holder gets 2% of the interest, while the bank provides loans at 4% and higher. Fractional reserve banking is what allows banks to keep a portion of your money in the bank while lending most of it to businesses and consumers. But if every single depositor comes for their $1,000, it's happened in the case of Silicon Valley Bank, SVB, the bank won't have the cash on hand. If the bank is at risk of shutting down, then everybody is going to be rushing to get their $1,000 out. When this happened at SVB, the California bank regulators stepped in and put the bank into receivership. What is receivership? Please explain that to me. The Fed has sowed the seeds of financial crisis in more ways than zero reserve banking. When the Fed funds rate increases, it affects car loans, housing U.S. treasuries and make small business loans more expensive. When the value of treasuries decrease, the yield of treasuries increase. Banks are affected because they have a ton of treasuries on their balance sheet. As in case of SVB, banks that fail to hedge the risk go bust. If SVB systemic, approximately 1,000 startups had their money at Silicon Valley Bank, and the bank failed. If the bank failed, all those startups could have also been wiped out. Major publicly traded companies did have money at SVB, including Roku, which held approximately 487 million, nearly a quarter of its total cash at the bank. That's only a quarter? I didn't know Roku was making that much. Only 2.7% of Silicon Valley Bank depositors are less than $25,000. Therefore, 97.3% aren't federally deposit insurance corporation insured. The FDIC is an independent federal agency, and banks pay a premium for banking insurance of $250,000 per depositor. If in 2012, Congressman Ron Paul held a hearing titled "Fractional Reserve Banking and the Federal Reserve: The Economic Consequences of High-Powered Money." In this clip, Paul asked Dr. Joseph Sorrento about the gold standard and whether fractional reserve banking causes bank runs. Of course it does. Surprise. Surprise. SVB serves startups with millions of dollars. Even though SVB is a regional bank, it is considered one of the second largest bank failures in U.S. history after Washington Mutual, with $212 billion on its balance sheet. Jeez, that's a lot of money. That's a lot of money. FDIC insurance would not cover most people, as the agency currently only has around $120 billion on hand. Wow, your insurance at work. Oh my god. With thousands of banks in the U.S., many regional banks could be experiencing similar issues of SVB. The SDIC just it ain't gonna cut it. If all the banks go down, well, at least most of the regional banks, the best case scenario would have been for a private entity to come in and buy Silicon Valley Bank, making those depositors whole and stopping contagion. This did not happen. You're old. How large of a crisis could the Feds stymie without having to print money? Stymie without having to print money. Not a very large one, and people know this. The Fed could slow interest rate hikes. Could, but I don't think they will. The Fed has been raising interest rates to combat inflation. If the government prints more money to bail out the SVB bank, or any banks that may follow, it creates the perfect conditions for inflation. We're already inflating. You mean hyperinflation, right? The Fed always breaks the economy when it embarks on a quantitative tightening program in an attempt to bring inflation down. In 2008, mortgage companies gave mortgages to anyone with a pulse, which led to the 2008 financial crisis. Those were the first domino to fall. With SVB depositors basically getting the bailout. The U.S. is essentially using a band-aid to plug a hole in the boat. If many regional banks have similar problems to SVB, the Fed will have to begin another episode of quantitative easing, which could bring inflation rolling back. We are already inflating, bro. The U.S. is at the onset of the major inflationary scenario. The Federal Reserve is the emperor, and the emperor is wearing no clothes. If it continues to raise the interest rates as a means of fighting inflation, more cracks in the U.S. economy will spring up. If it stops raising interest rates and even lowers them eventually, the vector of inflation could creep back into everyday life. So there's no easy way out of this. Other than to let banks and corporations fail and file bankruptcy. Which once again, I started this video with Yeah, people are in bad times. People are in rush shape, and I know somebody getting ready to file bankruptcy, and it's not being a good. It's not. It's just not a good time. We're not having a good time on either end. The banks are not having a good time. The people are not having a good time. The corporations are not having a good time. We're out of money. It doesn't come from any. It doesn't come from nowhere. You can't just lend out $900 with 1,000. And you know, we need the gold standard back. That's why Bitcoin is, or just crypto in general, is piquing a lot of people's interests. But unfortunately, most people are on the TikTok diet, and if they don't get the information that they need immediately on why this is better, they're not going to try it, especially if it's hard and not just easy to point and click. But what do you guys think? You think this is going to boost Bitcoin? I'm going to say it already has, but back to the spicy meme. I think it already has. But we should be probably boosting Monero, but that's what it is. I'll see you guys later. Hopefully sooner than later. Let me know what you guys think in the comments. Bye.